Alright, in this next video, this is going to be specific to credit risk. Alright, we're going to create a, we're going to do a market video kind of talking about the credit risk space, right? So, within all the markets that we work, right, if you look at our clients, alright, and you open up our client tab, from there we have obviously EY, PwC, and Accenture. The group that has a specific credit risk space right now that's hiring is EY. Accenture also has one, but let's go ahead and open up EY. From there, if you look at everything that's related to risk and regulatory, capital markets, or the miscellaneous or other, right, it's obviously going to fall under risk and regulatory. If we open risk and regulatory, here are the main groups that we work with right now: liquidity risk, credit risk, ERS, TSD risk, risk and compliance technology, so on and so forth, right? Credit risk, right? This is PI, credit risk, performance improvement credit risk. So let's open that up, all right? And so the first thing I want to cover with you are the keywords. All right, let's look at the keywords that are associated with credit risk. Right. So first, ALLL, allowance for loans, leases, and losses. Right. Probability of default, exposure at default, loss given default. All right, and then Basel II, Basel III, you'll see associated with that. Right, so those are some credit risk terms. A little bit more specifically, CCAR. You can certainly associate CCAR with credit risk. Within the broader credit risk group, there are 3 or 4 different groups. One of them is actually titled CCAR. Right, and CCAR, I can't remember exactly what it stands for. It's comprehensive capital not adequacy analysis review. All right, so essentially there are requirements that bank and financial institutions have to keep a certain amount of capital on hold at all times, this review is to assess how much capital they're keeping at any given time. DFAST, right, is Dodd-Frank Act stress testing. And stress testing in general you can associate with credit risk. Capital management, again, is going to be related to CCAR, but capital management this is management of capital, making sure that you have enough capital that is liquid. All right, because what happens is if you're lending to if you're lending and or investing a lot of your capital, and you get to a point where you need assets to be liquid and you don't have that, that's a huge problem, and it has a huge influence on economic downturn that we've seen. Right? So these are the words, right, that are associated with credit risk, right? So that anytime you log into MindJet, you can come in, click on this, and see these keywords, right? There's some white papers here. Right, there's some interviewers and partners within EY. There's some example candidates we're going to go through in a second, and then there's the job description. So next, we're going to take a look at the job description. All right, credit risk. Advise clients on a number of credit risk and capital-related topics. So look, dual rating methodologies. Right, so here again are the same terms that we just saw: probability of default, loss given default. All right, so that's just what's the probability that a loan is going to default. All right, and so these models essentially are telling people, what is the risk that your loans are going to default, that people aren't going to be able to pay back on the money that the bank has lent them. Right. Again, credit grading system validation, credit policy. Credit risk essentially is just the risk of the credit that you're lending out to other financial institutions. All right, that's pretty much what it is, right? Capital allocation. These are all words that, again, if you were to highlight the ones that are most important, they're right here, right? It's just you hover over this. It is the capital management. It is probability of default, exposure at default, loss given default, allowance for loans, lease losses, right? They're essentially the same thing. There's not a lot of content here that's more helpful. They're saying the same things over experience at a regulator, right? Regulatory rating agency. Rating agencies are like Moody's Analytics. Rating agencies are Fitch Ratings, Standard & Poor's, right? Those are rating agencies. A regulatory agency is a Federal Reserve Bank, is the OCC, is the FDIC, right? So to put it in perspective, broad consulting and project management skills. Right? This is general. That's not specific to credit risk. This one may be risk-adjusted performance measurement. You may see RAPM. It says economic capital topics. Right. So this is somewhat helpful, but let's take a look at this again. You'll see the credit life cycle. Right. Understanding the life cycle of a loan. Right. Credit risk management infrastructures, quantitative methods, and tools supporting credit risk measurements. Credit risk measurements again are going back to these things here. Here again is a risk-adjusted return on capital. Basel II talks about some of these issues. Funds transfer pricing, asset liability management, these things I would actually associate more with liquidity risk, not credit risk. So that's a job description. Is it helpful? A little bit, not really. All right, it's not. It's really just the keywords, and then from there, have you go. You can research, you can Google what these keywords are. I'll have you do that after this video to get a better sense. But now let's go ahead and look at some of the partners, all right, and or interviewers in this group. So let's look at their profiles. So if you look at Judy Modica, she's an executive director, experienced in credit risk management analysis, portfolio analysis, policies, procedures, regulatory interactions, project management, credit risk systems, right? Credit department administration, credit risk systems again, right? She's been here for 6 years, not a lot of content here, but you can see she came from Bear Stearns, right? She's a senior managing director over there. She was a COO for global risk management department covering credit, market, and operational risk functions. These two, credit and market, tend to work very closely with each other. However, they're very different. But this is someone that came from industry, right? And made the transition into consulting. You look at her skills, risk management, credit risk, credit, loans, right? Anything in the lending space, lending risk related to lending is going to be credit risk, right? So that's not a ton of content, but let's look at who else we have here. Now we have Tom Jackson, executive director out of Charlotte. Used to work at Bank of America, right? His title there, Global Stress Testing Executive. Again, stress testing is something from a keywords perspective that we can associate, right, with credit risk, right? So I'm not just making this stuff up. So he was also industry and went into EY, right? But again, Global Stress Testing Executive. Before that, it looks like he was at Grant Thornton, which is a consultancy. Arthur Andersen, as you should know hopefully by now, is Accenture before they transitioned to Arthur Andersen. So I had a bit of a consulting background, went into industry, and then came back out to executive director at EY. So again, not a lot of content. Let's see if there's anybody else with more content. Arpin Shah, senior manager, been at EY since 2009. Before that was at State Street, right? So let's look at the background real quick. HSBC, right? Was in industry, was in the bank, investment bank. Went to Citizens Bank, right? As a senior business consultant, which most likely, however, means, well, this was the company that they were consulting at. Maybe we should take a look at this. Citizen Bank must have been a client. Work closely with risk analytics and performing probability of default, loss of default, exposure at defaults, distribution by products, blah, 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 blah. Here you'll see calculating credit risk parameters, right? That's how they phrased it. Talking about these calculations again. Credit regulatory capital, right? These again, all the same keywords. Went to State Street, consultant for regulatory capital and reporting, all right? And then joined EY at the senior consultant level. Alright, and it's gone up to, just been promoted to senior manager. Basel III, you'll notice, right? You look at the profile here. Experience working with global investment commercial banks in the areas of capital management is the first thing that he says. Regulatory compliance, capital planning, CCAR, obviously, right? Focusing areas of Basel I, II, and III. Experience working with the credit risk team, finance and implementing. Here are the models again. Retail and commercial products, you'll see residential mortgage, right, is a type of loan. A mortgage is a type of loan. Auto loan is a type of loan. Term loans, right? These are going to be more specific. I actually don't know what these are. But then, again, looking down here, risk modeling, capital manager, SunGard. These are systems that You can use to create some of the models that he has experience with. Right, so a lot more content here, but as you can see, very aligned. If you look at to the right here, look at credit risk regulatory, EY. I'm sure if you looked at all these guys' profiles, you'll see a lot more content with them as well. Right, that's going to be similar. So anyways, there's more examples here, but now let's just quickly go over into example candidates. Alright, we have Joe Sergienko. He's at Promontory. You can see here risk management, finance management, AML, strategy. So the first look at summary, it's not going to scream credit risk, right? Even here, his most recent work, it's not. This is not screaming. Nothing here says credit risk. Financial risk management is very broad, and everything kind of works underneath financial risk. So underneath FRM would be credit, market, operational, right? However, again, it's not very clear that's what he's doing. State Street as a VP, evaluation analytics, it still wouldn't tell you that, but right, develop end-to-end stress testing process, right? Wide range of stress tests to assess risk. You're stress testing again. Now you start to see, right, informing companies' senior management on board earnings and capital adequacy in the event of financial distress, right? So essentially, his role was to inform board members about where their capital adequacy, what level of capital they had, and running models to see in times of financial distress, how much capital would they have? Would they have enough to meet regulatory requirements? All right, if you see that, you know that, then you can associate that with credit risk. Now, specifically at EY, you can also associate recovery and resolution planning / living wills with the credit risk space. Right, this type of work can also be a fit within the regulatory and compliance space. It can also be a fit within the enterprise risk services space. But for the time being, if you see this, it could be. We can go ahead and safely associate this work, excuse me, with credit risk. Right. So, anyways, that's the work at State Street. This is a person who went to the final rounds of interviews with EY. All right, you get the resume. And there's a bit more. Let's see, is there any more? So really what it was in conversation with him, we clarified that his role has been predominantly focused in the capital management space, stress testing management. So it doesn't really, again, the content doesn't really speak credit risk as strongly as some of the others, but when speaking to him, saying capital management is the work he's in, gotta be a fit for credit risk, right? So that one's maybe a little bit trickier one. Let's look at a couple other examples. We have... what's happening here? Okay, welcome back. Just look at a couple more examples, and then we'll send you. Okay. Ken Lamb, right? HSBC. This person has an offer out right now with EY's credit risk team. All right, you can see HSBC. Right, this guy's out of industry, works directly for an investment bank. ALCO is actually asset liability management, so that's actually not good. That we can associate more liquidity risk, but right now is part of the capital planning team. Right, so capital planning supports the CCAR and DFAST processes. Right, stress testing again. Again, ensures all process and procedures for whatever. I'm not sure what this stands for here, but then capital planning team. Those are things you can associate all these people here. CCAR stress testing, CCAR capital planning. These are all things you would associate with credit risk, right? This person has an offer out right now. The last person we'll take a look at, KPMG, right? Credit risk advisory, right? Here's the first example. We see people with ALLL all over the place, right? So you don't see CCAR, you don't see DFAST, you don't see even credit risk besides the group here. You don't see capital planning, but this person had an offer and was placed at EY, decided to pull out, but again, offer with EY exactly what they're looking for. Alright, so hopefully these examples help in your understanding of credit risk. There's more information and resources within the MindJet app.